welcome on board Sunil Subramaniam as well. Perhaps he too would have a view over here. Sunil, okay, and we also have Jimit Patel here with us to get a sense on the same. But gentlemen, both of you, afternoon. Sunil, let me start off with the conversation with you, and just wanted to understand, how do you think this move is actually going to impact the MF industry to begin with? Sunil, you'll have to unmute yourself.
Yeah, hi. So I think that, overall it's going to help the industry in terms of expansion because I think clear cut, there's going to be a 15 basis points reduction in the cost of mutual funds, right, to the customer. So I think to that extent, the compounding effect of that 15 basis points as a cap, which has come down, should help overall the industry's returns as well as customers to do that. But within the industry, the various players, right, the impact will obviously vary. So what's happened is that now I just heard the discussion that you had with your team member there, but I have a slightly different view, right? So first is that broking houses are getting impacted. You're saying from 12 basis points down to 2. But the reality is that most AMCs are not paying 12. They have negotiated this. The average is about 5 to 7 basis points. Now, the second is that it's not those brokers are going to lose that bit because all it says is that the customer can be charged only 2. So if an AMC, let's say, is paying 6, the 6 minus 2 will come out of the expense ratio, which is already there. And there the choice is whether the AMC picks it up or they reduce distributor commission. Now, AMC to AMC, it will vary depending on the distributor negotiation, it will vary. But the point of the matter is, two broking houses, the knee-jerk reaction in the market today, I feel is a good time to buy because brokerage houses are providing that research for which they are getting that fee. It's going paid as a part of the transaction charges. But I think a top quality broker who's giving good quality service, this is not going to make them reduce that fee significantly. So today has been a knee-jerk reaction to the reaction as far as broking is concerned. The second aspect there is that, of course, AMCs, in terms of the reduction of the 15 basis points on AMCs itself, I don't think that impact is going to be that strong because they will pass this on to the distributors. So, as a reduction in the brokerage cost. So, to that extent, AMCs, I feel if there's a negative reaction today to the AMC thing, I think even that's a good opportunity to buy. Now, you come to the third angle of it is for distributors. Yes, there will be a reduction in their trail commissions by the bigger AMCs, especially because the bigger schemes are the ones which suffering the biggest 15 basis point cut. So they will naturally see a reduction. But what's also happened is that SEBI has also helped them another way because they have now allowed the GST on the trail commission, which was paid from the scheme, to be paid outside. So, which means that I think that this is my interpretation. So, in which case, the mutual fund distributors can set off this as the input tax credit against the expenses they have. So, while they may lose on the trail commission, on a post GST basis, their income will also get protected. So, overall, I think that it reduces costs for the customer. I think AMCs and the people manage this situation, and the GST thing will come and help even the distributor. So, I think that today the reaction is a bit of a nervousness to this, but overall, I think it's a decision which will help expand the industry and is in the interest of customers.
Right, fair point. But Jimmy, let me get you in on this conversation. Firstly, on the curtailing of brokerage payment, how do you think that piece will pan out?
As my colleague just mentioned, Sunil, it's most of the players were paying 5 to 6 pips, which also the data point shared by the regulator states that. In addition to that, what is also stated in the regulation is that while you may charge 2 bips or 1 bip, the balance can be part of TER. It can still be part of AMC. So if a smaller AMC were to pay a 5 bip or 6 bips, because for a smaller AMC, getting a 2 bips and a 1 bip is highly difficult because of the sheer volume. No broker is going to charge a 2 bip and a 1 bip to a smaller AMC. So there, the smaller AMCs, on the contrary, will take a hit rather than the broker. And unfortunately, the regulator says that the difference between the brokerage paid minus 2 bips or 1 bip can be part of TER. In addition to that, there is also provision that any expense over and above the TER after plowing back of the management fees can also be borne by the AMC or the sponsor. So all those tools are available. Plus, the most important thing that we are all missing out is expenses that were part of TER were earlier all inclusive of GST, be it the R&T fees or the custody fees or your banking charges, etc. Now, GST component or any statutory levies or even a stamp duty have been carved out outside the ambit of TER. So all expenses which earlier were inclusive of GST will be accounted for at their nominal value, and GST thereon will be over and above TER. So if you accumulate the GST component of all the expenses, including the management fees, it will the cut of 15 bips will more or less take care of. So there won't be a bip in the earnings of the AMC. The distributor, currently the commission is inclusive of GST. Now that will also be excluding GST. So again, an accounting set off can be made available by the distributor fraternity. One has to wait and watch how the different service providers provide data points in terms of cost plus GST thereon to enable the AMCs to book their expenses properly within the permitted revenue of 2.1 or 1.9 as permitted by SEBI.
Let me also welcome on board Akhil Chaturvedi, the CBO and ED at Motilal Oswal AMC, joining in on the show right now. Also, Akhil, hi, afternoon. Want to get you in on the conversation. What do you think will be the net result if indeed this consultation paper actually goes through? You think AMCs will then sort of negotiate lower brokerages from their brokers if this rule does go through?
So Aisha, I think Jimmy is given a very detailed understanding of how the expense ratio is going to work. But broadly, if you see that we feel that there should be a negligible impact between the commission arrangements between AMCs and distributors, because as Jimmy explained that while there is a 15 basis cut on the base TERs, the GST and the other costs have become exclusive, right? So it should be revenue neutral to both the parties. I think one particular cost item, which is the 5 basis point, which is being charged in addition in lieu of the exit load, which goes away completely, right? So to that extent, maybe there could be some normalization, one-time effect between AMCs and distributors. But for the regular business, I don't see too much of impact or negotiation either ways.
Okay. Sunil, if I were to come back to you, give us a sense. So yes, definitely this is a decadal theme, right? But what's in your opinion, what's the likely impact and who is going to be the most impacted by these regulations, the adverse impact? Give us a sense on what you believe is going to be the adverse impact, and what should one keep in mind in terms of the quantum of the adverse impact?
So I think if you ask me the adverse impact, I'll take it as two parts. One is from a stock market participants and a non-stock market participants, right? So the overall regulations today impact broking houses, AMCs, and listed distribution partners, right? So these three other listed players. And I think between them, there will be not much impact because to answer the question there, for brokers, like I said, the average is already being charged 5 to 6. 2 will now come from outside of the scheme, and the balance 3 to 4 will come from inside the scheme, right? To the extent that there's a little bit of a hit to the AMC, I think there's also the fact that there's a 15 basis points cut in TER. So at the lower end of the distribution pack, which are not the listed AMCs, but the smaller MFDs, they'll probably take a little bit of more of the brunt. But the listed bigger distribution houses will be able to negotiate a reasonably better commission structure. So I don't see them also getting affected. And as far as the AMCs is concerned, because there is this huge pool of large set of mutual fund distributors who are at the base end of the bottom of the pyramid, right? Passing on a little bit to them, they will be able to manage. So to me, really speaking, there's a big negative reaction to any listed player in the stock market because of this. There will be some impact on the smaller marginal players whose negotiating powers are naturally not as strong as the bigger players. So I think that's the way I would summarize this.
And Jimmy, if I can come to you, give us a sense on, would you be able to in some form give us a sense on what the impact for an AMC will typically be? I know it's hard to determine, and it will also depend on what the brokerage currently is like, but some of the larger brokers obviously might benefit a little bit more.
On the AMC front, as I mentioned, because of the GST component, it has to be expense neutral in that sense at an overall expense booking perspective. If we were to look at exclusively only from a brokerage perspective, yes, there might be some hit because, as I mentioned, the smaller players may not be in a position to negotiate that well with the broking houses, and the and the broking commission or the brokerage may not necessarily come down to 2 bips or 1 bip because of the sheer volume that the smaller AMCs offer. So there probably the broking houses will have an upper hand for in terms of leveraging their strength for the efficiency in dealing vis-a-vis a smaller AMC. As far as rest of the cost structure goes, nothing changes. 15 bips gets compensated or gets neutralized by virtue of the GST component.
Excellent, super clear. Akhil, give us a sense as to what this means from a customer standpoint. Does this make life better for the customer, you believe, in the longer run, or does this bring or does it leave it open for further reform in this space? Is that something that one should fear? So from a customer and from a business standpoint, give us a sense.
Yeah, so, I mean, if you see over the last a decade or so, I think every time the industry is achieving a significant milestone, there are economies of scale, and clearly the direction given by the regulators is every time there is a economies of scale, the benefit has to be passed on to the end investor. And over a period of time, we've seen that there have been significant reforms as far as TERs, entry loads, exit loads, all of these things go. We are still in the growth phase as an industry, and I think there are miles to go, and the industry can become a lot more bigger in size over the next 5, 10, 15 years. And therefore, I think the reforms probably would continue. I mean, the last reform happened in 2018, I believe. At that time, the industry was about 25 lakh crores. Today, we are 75 lakh crores, right? So I think the reforms will continue, and clearly investors will keep benefiting from the incremental reforms. This time around, I think the reduction of the trade cost or the brokerages paid to brokers for trades coming down by 10 basis points is like it's a meaningful cut in terms of operating expense, and that benefit will eventually be realized by the investors. So yeah, they stand to gain definitely.
Okay, Akhil, Jimmy, Sunil, thank you so much for joining us, gentlemen, for this discussion. It's been an engaging one. Thanks so much for coming in and speaking with us. All right, and what we'll do, viewers, is we'll slip into a very short break. We'll take a bit of a breather. On the other side, we'll continue to talk stocks. Some really flying. Varun Beverages is up nearly 10%. Let's talk about that once we're back.